Hello, everyone. Welcome to Income Investors. My name is John Whitefoot, and with me today is Mo Zulfiqar. Now, today we're starting something different. Usually, you'd listen to me talk about income picks, but we also think it's important to take time to look at the overall economic and financial conditions, since this has a massive impact on how stocks perform. Our goal with these videos is not to tell you what to buy or sell, but rather inform you about what's happening more broadly. Remember, investing comes with risk, and it's important you read the disclaimer in the description below. That said, Mo, what do you have for us today?
Thanks, John. I thought we'd begin with something that may not be getting much attention these days. You see, on a daily basis, we're told that the US economy is strong and resilient. And if you look at the economic data, it confirms that. Here's the thing, though. Headline data may be great, but there are some cracks appearing, and I think they're worth watching closely. So today, there are two things that I'm watching. One, it's corporate bankruptcies, and two, job cut announcements.
Okay, start with what's happening with corporate bankruptcies.
So, John, consider this. In 2022, corporate bankruptcy filings amounted to around 372. And just so you know, this data is compiled by S&P Global Intelligence. And they look at public companies with asset or liabilities over 2 million and private companies with asset or liabilities over 10 million. Again, in 2022, there were 372 corporate bankruptcy filings. In 2023, this number surged to 642. And if you do simple math, this represents an increase of 72.6% year over year. Now, how significant is this 642 corporate bankruptcy figure? So if you look back, it is the highest annual number of corporate bankruptcy filings since 2010. And I know one could argue that this is all happening because interest rates have increased to multi-year highs, and I think there's some validity to that argument. However, bankruptcy surging to a 13-year high very quickly shouldn't be taken lightly whatsoever. Don't forget, this is happening when we're told that US economy is strong.
Okay, and what's happening with job cuts? Like the US unemployment rate is at a very low level. Last time I checked, it was under 4%, I think.
Yes, you're right. Unemployment rate is certainly low. And if you look at other measures of the job market, such as, initial claim, that's essentially the number of people applying for unemployment insurance is at lower end of the historical average. However, there is one thing that I closely follow, and it's the job cuts announcement. That data eventually shows up in the job numbers. It takes time, but it eventually does show up. And one place that's worth watching for these announcements is the Challenger report. It's issued by global outplacement and business executive firm Challenger Gray and Christmas Inc. each month, and it keeps track of how many job cuts were announced in the previous month. In March, for example, US-based employers announced 90,309 job cuts. This was up 7% from February, and it was almost the same compared to March 2023. Now, here's the worrisome part. In the first quarter of 2024, companies announced plans to cut 257,254 jobs. This was up 120% from 117,163 job cuts announced in the fourth quarter of 2023. And I finally quote what Andrew Challenger, labor and workplace expert and senior vice president of Challenger Gray and Christmas Inc. said. He says, layoffs certainly ticked up to round out the first quarter, though below last year's level, many companies appear to be reverting to do more with less approach. While technology continues to lead all industries so far this year, several industries, including energy and industrial manufacturing, are cutting more jobs this year than the last.
Okay, now taken together, what does this information tell us?
John, I think it's important investors know what's happening. For years of following financial markets, I have learned one thing. Headline economic data usually shows problems a lot later. Corporate bankruptcy filings and soaring job cuts shouldn't be taken lightly. They could be hinting that US economy may not be as resilient as perceived, and problems are brewing. Obviously, with time, you will know more.
Thanks, Mo, for your great insights. If our viewers want to find out more about income investors, you can find the link to our website in the description below. While you're there, you could sign up for one of our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. We'll be back with more income picks and insights soon. So stay tuned and don't forget to like this video and subscribe to our channel. Goodbye for now.